Hi guys, so I'm making a portfolio which will be mostly US based and cryptocurrency based, and S&P is at all-time high, so it's not a very good time to make a portfolio, but I'm still picking some stocks which are currently at low levels, or you can say they're moving at below 200 days weekly average. So I'll just start with those specific stocks, and I'll share one Excel in which I'm recording all the stocks which I'm buying. So I'll just start now, and I have a different screen, so my face will be inclined towards a different screen right now. Okay, so I'm sharing now. Okay, the very first stock is United Health Group, and why I'm buying this. First of all, you see this big drawdown which came on United Health. It fell by somewhere around 63%, and the only reason why it fell by 63% was Trump policies toward healthcare. He completely focused entirely on cryptocurrencies and American equities, especially tech and AI equities. So healthcare was not his priority, and the stock fell by around 63%. And if you see after this fall, the stock has jumped back to somewhere around how much it is. It has gone up by around 90%. So approx it has doubled. And the good thing is it is still trading below its 300-day moving average and 200-day moving average. And I'm talking about weekly currently. So there is high chance that the stock will regain its 500 levels. Okay, if you see this at this level also, it was trading somewhere around $500 to 550. So I think that whenever this AI spending is minimized, we'll see some sort of rally in healthcare stocks, and United Health will be the first one to get such increase. And I'm expecting somewhere around 25%. So this is my target, somewhere around 25% for United Health. And now moving to the next one, which is Netflix. Okay, now if you see the weekly chart of Netflix, now same case for Netflix also. So Netflix has gone down by somewhere around 51% from its all-time high. And why it has gone down, there is no specific reason. When there was earning reports of Netflix, they mentioned about slow growth rate in the subscriptions. That might be the reason why it has fell by around 50%, but it's completely fine. Now, why I'm saying completely fine, if you see that it has gone up by how much? 700% in 18 July to 23. Yeah. So almost 3 years it has gone up by 700%. So 50% drawdown is completely fine for such type of stock which has given 700% returns. Now, why I'm planning to buy this? So I have bought around 50 units of Netflix, which means that I have only bought half of what I want to buy in Netflix. Now, if you look at the graph of Netflix, first of all, look at this. So in 2021, Netflix fell down by it fell down by somewhere around 75%, and it was trading below its 300-day moving average, and it rose till 100. So currently, if you look at Netflix, it is trading just above its 200-day moving average, which is the green line, and it hasn't gone below the black line. So if the stock goes above the green, I will not be buying it more. I am done with my buying on Netflix. But it fell to $50 below the black line. I'll be adding more Netflix, which will be the remaining 50 units of Netflix. And I'm recording those data here. So you can see that Netflix I bought somewhere around $74 on 16th of July. And United Health I bought it today for 411. And in United Health, I'm done one third of my buying. And in Netflix, I'm done by 1 by 2, which is 50% of my buying. So this is my analysis for these two specific stocks. And on an overall index, if I look at SPX, now SPX has skyrocketed. Okay, so if you see today is it's at all-time high, and it's never a good idea to make majority of your portfolio when an index is trading at all-time high. Okay, so I'll actually wait. It's not that I'm planning to buy anything at this red line or yellow line. I'll wait for some dump in S&P, and I'm expecting around 10% of fall in S&P in the next 2 months. So if it fell by 10%, which will give us 7100, which will be somewhere above the red line, which is 50-day moving average. So I'll be planning to add more uh, specific stocks in this index. I'll not do index buying because, again, if I'll be buying SPX somewhere on the red line, it will be 50-day moving average. So again, I don't want to buy anything, uh, especially the index at 50-day moving average. 200-day moving average is the best time to buy an index, but at this red levels, I will definitely get some good stocks from these to buy at. Okay, so I'll keep it short.